There are many ways to make money from crypto. If anything, I'm pretty impressed by the innovation in this space. But how do we actually make money? I mean, that's the real question that everyone wants to ask, right? So, if we want to borrow some of these standard investing talking points, the question will definitely be, how do I know which crypto will be the next 10 bagger? Essentially, 10x, growing multiple folds. How do I know which crypto project is worthy of my time, lending them some liquidity in the form of staking? AKA staking, which is, just putting money with them, putting your crypto with these crypto projects, hoping that they make money, and then you get back some sort of returns. What have you, right? It's pretty interesting. A lot of things are happening. But the base question is, how do I know what is a fair value? Welcome to another Chills with TFC session. In this series, we hope to bring on interesting, relevant people to help us learn better from various perspectives. Life is not always about learning from people that you already agree with. Perspectives shape a rounder thinker. So in our pursuit of the life we love or managing our finances well, our guest for today is someone that used to work in the derivatives trading desk in some of the biggest banks out there. Essentially, he's one of the highest paid guys, yeah? But he quit despite the absence of blessing from the family to join the fast-growing cryptocurrency space. He is the APAC head of business development from Gemini. Gemini is one of the world's largest exchanges for cryptocurrencies, headed by high-profile founders. Just go and search, who are these guys? But they do more than just that. They have developed a whole range of products, from payments to wallets to staking your cryptocurrency with them. So let's welcome Eugene Ng from Gemini. Try to help us understand, as a retail investor, how do I then invest in the crypto space? Long-term investments and something that's a little bit more short-term, kind of like cyclical and value play. If we want to kind of put it into what most people will understand in a retail investor environment, right? So how do I then make money in crypto today? If, let's say, I don't mine, I don't trade, what are some ways as an investor of cryptocurrencies I can actually profit from?
It is a great question. I think that's really, going back to fundamentals. I think in most investing 101, you really have to look at the fundamentals. And if that fundamentals tie in with your long-term narrative and your thesis, right? So if you think the world is going to be digital, like, streaming, you should be buying Netflix 5, 10 years ago. Similarly with investing in crypto, the view in crypto is really, do you view crypto as a short-term speculative play, or do you view it as a long-term paradigm shift in the way the world is operating, that crypto is going to be highly important and integral to this paradigm shift, right? And so to me, when I look at crypto, I'm not betting because I'm thinking that the price of Bitcoin or any other crypto will rise by more than twofold in the next 1 year. I'm looking into investing in crypto because I think in 5 to 10 years time, this is my 10x, my 20x, my 50 bagger, right? And this is going to be a part and parcel of mainstream adoption. So for me, when I look at investing, it's no different from investing in speculative stocks like specs, high growth names, junk bonds, you name it. We've seen all those, jazz. And so with crypto, I also view crypto as an asset class where you want to be betting for a long term if you want to be making money. If you're trying to time a market, I feel like it's not necessarily the easiest market to play, just so because there's so much noise and nuance differences between traditional markets and crypto markets.
Okay, so interesting on that, right? 10 baggers, 20 baggers, essentially it's 10 times, 20 times, right? That's
Yep.
what we're trying to seek for. So what you're saying is very overarch, very big, market trends, macro view, and that is it's like index investing, right? You buy the whole market, you're expecting the whole market to move. But is there actually index funds in the crypto space? Can I actually own the whole market? Is there something like that here?
There are actually a few open and close-ended ones that is listed, but I would say that they are rather illiquid, perhaps because we don't even have a ETF in the US, right? The only regular ETFs, which also uses Gemini as custody and execution, is the Canadian regulated Bitcoin Ethereum ETF. So, without
Canadian regulated Bitcoin ETF. That's the
yeah,
name. Okay.
yeah. Oh, the name is actually, the first one is actually called Purpose Bitcoin ETF.
Purpose Bitcoin ETF. Okay, is that okay? Yeah, let's just search for the ticker yourself.
Yeah. Well, search for ticker, just
Yeah, too
search.
many tickers out there. Can't remember.
There's actually more than five
Mm,
today listed on the Toronto Stock Exchange. And I think you can find them on Saxo or all your retail brokerages that you use here. So for me, yeah, going
Oh.
back to the question, yes, you can buy into a basket. I think there are a few, but they're not easily tradable. And secondly, they may not necessarily be liquid. And thirdly, I don't think it's readily available to retail investors as well. So those are three considerations you have to take if you're looking into investing in a basket of cryptocurrency. I would then argue and say that given that you have platforms like Gemini, you can literally buy, a fraction of every top 10 tokens that is, based on the market cap and just hold, right? And that's really essentially similar to holding an index. And you pay less management fee because, if you buy index, they will charge you management fee
Yep.
annually that could be more expensive in the long term.
Fair, fair,
Yeah.
fair. I didn't know Toronto so exciting, huh? Toronto very edgy, huh? Cannabis, then now Bitcoin, everything. Okay, so shout out to Canadian Prime Minister, yeah, Justin Trudeau. But anyway, on that note, right, that is the very big overarch, right? But if as an investor, if I wanna buy the 10 baggers, like I wanna hunt for all these interesting coins, interesting cryptocurrency that can give me that 10 bagger, what are some core ideas that you have, or what are some core, frameworks that we should look at?
Yeah, that's a great question, right? I mean, it's akin to really saying, I want to buy the next Amazon. I want to
Yes, I
buy the
want to
next
buy the next growth.
Facebook.
Yes.
Yeah, but there are thousands of stocks out there. Similarly with crypto, there's thousands of them. And how do you actually pick? You know, it's never going to be easy. Even including me, right, who have been in crypto space for a while, right? I would say that it's important to be knowledgeable in this space, having the necessary general knowledge, and then ask yourself, how is the world going to be in the next 5 to 10 years, right? So, with the case of Amazon, Facebook, the FANGs, it's always easy to say, oh, I could have, I should have, that you could have made this 10, 20 bagger. But I think if we try to clarify our thinking and try to think about how the world may potentially look in the next 5 to 10 years, will we have flying cars? Will we have all electric cars? Will we be using air conditioning? Will we be having, ultrasound from, using our mobile phones, being able to use ultrasound? I know all this sound crazy, but I think in 5 to 10 years' time, this may be the norm. So looking at your thesis and looking at some of the major trends and then taking that and then looking at crypto, how would that potentially be relevant, right? So you are trying to identify, and the way I look at this process is really looking from a venture capital lens, right? When I look at investing, I look at based on trends. So it's a top-down approach. You look at what may happen in the next 5 to 10 years. Once you identify the trend, you identify how the world may look in the next 5 to 10 years. Then you go down to the next stage. Let's look at the segment of cryptocurrencies that will support this trend. After you look at the segment of cryptocurrencies that support this trend and narrative, you take a further dive, like a funnel down approach, and say, how do I differentiate amongst this segment of projects? So, number one, I look at team. So, remember I mentioned venture capital lens because in any project and any team, and any business that you want to be investing in, you want to be investing in a founder that you feel inspired, that you believe in his vision, and they can execute. In all these companies like Amazon to Facebook to Tesla, whether are they successful or not, as founders, that can be argued, but we all have to plainly agree that based on market cap, they're all very successful in their own ways.
I think
So
Tesla is the only odd one, based on the examples that you put out.
at
People
least,
have no doubt the Fangs and Microsoft and yeah, but everything has a caveat.
yeah.
Yes.
So the number one, team, and that's why I say that founders are important because they set the tone, the vision, and business is to me, investing in a business, you need to invest in people, and I look at founders as very critical part of your investment process. The second,
Wait, so how do you evaluate the quality of a founder then? it's the same as brand. Everybody tell me
Mm,
brand is important, but everybody has a very different way of evaluating that. So same as founder, same as team. These are very qualitative ideas, right? So
yes.
what do you look out for in a founder to know that, hey, actually I think these bunch of people can make it?
I look at, especially that background, especially for those with, sort of, years on their hand. I look at what they've done in the past, right? And I really like to see that they have failed in certain ways, right? Like, the story of Mark Zuckerberg having done that a few times is that understanding of how you fail and how you can learn not to fail again that really makes you a better founder than others. And I always like to go back to practice makes perfect. I like to see somebody in a very specialized seat trying to develop something that gives a value proposition that no other companies can provide. And from that is like looking at this guy, how is this guy going to build a product that is going to kick ass, going to beat everybody's products because he has spent 10,000 hours on learning the segment so well that I'm so confident that he knows this market better than anybody else. So for me, I look at his specialization, his experience. Secondly, I look at his track record. Have he executed? Even if it's failed, like I mentioned before, it's fine as long as experience that's important. And thirdly, do have a team. So a lot of the founders we see, they're not necessarily superstar. You need to have a team. Your team is there to support you. It's always good to have a superstar founder, but if you can't build a team, you're never going to scale a business to a global company. So for me, I will look at the team. Who's supporting their team, right? Are these guys equipped with the right skills, or are they just high school friends coming together because they know each other so
Sounds like a
well?
lot of startup.
Exactly.
So is tech important in terms of like within the founding team? Because much like investing in any other tech startup, I think the tech core is important. So I'm assuming all cryptocurrencies is a tech business. So do you think having tech enabled founders are important?
I think having tech-enabled founder is important, but more importantly, you need to be able to understand your customers. So while being very technically savvy, like I've met so many software engineers who are founders, but if you're not close to your customers, you're not building products for your customers, but instead building a product what you think is great for your customer, but may not necessarily translate into success for your product. So that's important.
Okay, okay, that's cool. So other than team then, how do you evaluate the chance of success or the chance of getting a 10 bagger?
I like the team to demonstrate execution in their product. So if they build a prototype, what's their run rate? How many customers do they have? How much assets they've grown? How much traction in terms of number of users? Things like that where it's quantifiable by a measure of their success in their roadmap is something that I look out for.
Okay, so where can we find this kind of information for an outsider? Huh? So,
Yeah.
yeah.
So for crypto space, there's a few ways. It depending on what segment that you're investing in one particular segment called decentralized finance, but in short, DeFi, where basically, long and short, is it's trying to disintermediate traditional finance, right? So, cutting the middleman, cutting banks, financial institutions, enabling a peer-to-peer economy. A lot of times the DeFi works based on how much assets is being pledged and collateralized. And in that process, the long and short is that you can see the total value being locked. You can see a total number of users interacting, and that those are good measure in how fast the product is growing. So on a very high level, that's how we gauge on a certain segment called DeFi. In certain other segments like Ethereum, you can look at the activity on the Ethereum Explorer. You can see how many transactions. You can see the gas fees. You can see the traffic, right? And that is also an element of how do you measure the success of a protocol, which is like blockchains where decentralized applications can be built on. And then if you look at something more like Bitcoin, which is more like a money, you can then also look at number of addresses, right? Unique addresses, the number of transactions, the market value. Also, then you can say, has it had any success? Because it's a form of money. So I just basically in this discussion already highlighted three major segments in cryptocurrency where you can use some very simple high level ways to quantify their traction in the market.
Okay, interesting. Let us go into a little bit more about DeFi, a little bit more about protocols. Okay, so if you talk about DeFi, so I think decentralized finance is going around the media circuit these days, right? For like a better way to put it, I think for a lot of our listeners, if you don't know, traditional finance have a lot of intermediaries. We have clearing houses, we have brokers, a lot of people that are doing the middle work just to validate the transaction and just kind of make sure that the whole system is working. So these guys are just kind of like oiling the whole financial system. So the guys in DeFi are really trying to like kind of cut out all these middlemen, like what Eugene said. And essentially, if you think about it, they are small little banks, or they are really just doing a lot of payment structure kind of things, right? So can you just kind of give us more clarity as to how do I then evaluate a DeFi project? That there's always hindsight bias, right? If a lot of like what you said, a lot of people pledge, their crypto into the DeFi project, and that's the whole staking thing which we can talk about. That is really just a commitment to the project, but it does not show the success of the project. It does not show that, oh, this project is going to get traction. How do I know that when I put my money with them, they're going to succeed? Right? I think fundamentally there are a little bit of differences here, because owning an equity is owning a part of the overall business. But in a DeFi project, when I stick it with a project, it's really me lending money to the project. Right? So how do I know that it's gonna be interesting, it's gonna work for me, and it's gonna be successful lah, in that sense.
So here's what I think, right? When we look at crypto, and let's take a step back before answering that whole DeFi question, right? When we look at crypto, we're investing in predominantly what we call token, right? And that's really a major departure to the way we used to look at investments, because we typically invest in a share, in an equity of a company, where you can say, based on the cash flow that is generated, based on what I think the discount rate is, then you can do your DCF and then say, hey, look, the fundamental value of this company should be X dollars, right? And that's how we were programmed to think of how do you value the company. So that's really how we've been looking at markets and valuing companies from a fundamental standpoint. And for me, with crypto is interesting because the company obviously is a company with equity who issue a token. So how do you exactly value and what are you investing in, right? If you're investing in the company that issues a token, we will likely have to adopt a similar approach to how we value a company in today's traditional finance, right? Finance 101. But if you're looking at valuing a token today, let's say a DeFi token, then we have to use an entirely new set of lens, right? Because a token at the end of the day does not represent an equity interest in that particular project or that company that issues that particular token. So, taking a step back again, how do we then value a token? When I look at a token, I look at the economics of the token, which people typically describe as token economics, tokenomics, right? And then I'll look at, okay, the issuance of token, the supply curve, the projected demand, the use cases of token, right? So demand, supply, use cases. From those three aspects, you can then decide and understand how does the token accrue as value. And that's what we are really trying to understand. When you pay for a token today, what are you exactly paying for? What are you ascribing that value that you're buying the token for? And so for me, I look at investing in token very differently from investing in Tesla or Amazon or Facebook. And so I will prescribe the value of token to a few different elements. One, like I mentioned, do you supply? Is there burning? Do they have a fixed schedule? How is the token being distributed? Is it fairly distributed? How are they being distributed in the next 5, 10 years? Demand. Can you look at the demand? Who is buying the tokens? Why is this price rallying? Thirdly, most importantly, use cases. What are the use cases that drive demand? So when I look at DeFi, I look at those three things. And as a result, a lot of people, like Vijay mentioned, they look at staking. Oh, you lend the token, you lend your collateral to this DeFi project, they stake more, but that does not necessarily ascribe value. I kind of think that it's an indication because the more value being staked, and really staking is an exchange for giving up the use of your assets, in return getting an interest on the tokens being pledged. And to that regard, the fact that somebody's giving out the opportunity cost of investing and using that crypto asset today, but tomorrow instead wants to receive an interest, is indication that there is a value being ascribed to the protocol. So for me, I actually argue that the total value locked in any DeFi protocol can constitute as a form of demand because it displays the fact that there are users out there who's willing to forego opportunity cost of owning an asset today. So that's number one. Second is to really understand, taking a step back as well. If everybody just looking at total value lock and say, oh, this protocol has 20 billion, that protocol has 50 billion. So the 50 billion protocol is probably more valuable than 20 billion.
Assuming market efficiency, right? That one.
Exactly. but that's not it, right? Because at the end of the day, what's most important is that how are the fees being accrued? How are these fees? Because at the end of the day, every DeFi protocol, they are making fees to allow their protocol to run. So you also want to understand, are these fees being paid to the stakers? How are these fees being attributed? So it's really also the understanding of game theory and economics, a very deep level of understanding what actually accrues to a token value that you can ascribe and then back out and say, okay, in 5 years' time, I'm going to get X amount of money because there's so much total value locked, and this is what it is. So second is really understanding the game theory behind economics behind the DeFi protocol, which is really important in my opinion. And thirdly, more importantly, what's the use cases, right? What are these DeFi protocol, driving? What are they exactly be used for? So if you are investing in this token, and this is the value or market cap of this token, do you think this value of token represents the value that it has disrupted in traditional finance? If I'm using this protocol, say for example, give you a good analogy. If the Swift network,
Everyone attacking the Swift network.
yeah, if the Swift network, if the Swift network charges everybody $50, right, for transferring money, and say every month it transacts and it generates more than $1 billion in revenue, just hypothetically, and you did invest in a DeFi protocol that is aimed to replace, right, the Swift network in moving money from one place to another place, do you think that you are investing at a value where it's bigger than what the Swift network is generating over the next 1 year, 2 years? So that's the way I look at it, right? Based on traditional finance today, what's the value that you're trying to disrupt versus the sort of value that you're paying for the token today? And so that's how I look at investing from a very long-term perspective in DeFi.
Okay, but that is the total addressable market way of looking at a thing, right? You're telling me, oh, because this market is this big, and then these guys are trying to go for this market. If they can dominate the market, then you should value them equally to the traditional network, so and so. Right, so that's one way of looking at it. But as an investor, if let's say I were to put my money into a DeFi project, okay, how does it look like? I'm actually buying a certain protocol as a token form, and then I pass it over to this project, right? And then the project will give me interest, essentially like what you say, opportunity cost. Instead of me trading out there, I put it with these guys, and then they give me my money. So then I don't really have upside in terms of the token itself, because the value of the token is not directly tied to the success of the project. You know what I'm saying? Because it's like I can be buying Ethereum. Okay, let's say I buy Ether, and then this guy is doing some DeFi project. They want Ether, so I pledge my Ether to them, and they give me 10%, okay, per annum interest or something like that. The success of the project, my upside is only 10%, right? So even if they are successful or not, it does not affect my max upside. I think people need to be aware of this, right? So then how do I know that Ethereum is going to continue growing, that the value of Ether in itself, which is my underlying asset that I actually own, will prosper, will grow, the price will go up?
Yep. That's a great question, Rudy. I think that a lot of people also confuse where the asset that you're using to stake versus the DeFi protocol that uses the asset that you're staking, right? Those are two different
Yeah,
things.
it's not your problem, After
Yeah.
you put your money with them,
Yeah.
they have control.
And then you usually get paid in the tokens that the DeFi protocol is. For example, Matic is one, and there's so many others like Aave. So if I'm very bullish on, say, a particular DeFi protocol, I will buy the underlying DeFi protocol token. That's one thing I'll do. And secondly, if I'm really very bullish, I can also use that token to stake. And it's obviously so many different types of DeFi protocols, and some of them actually allow staking on their native tokens, right, to do other, interesting stuff. So point being is that if you're very bullish on a particular DeFi protocol, my advice is to buy the underlying DeFi protocol token and hold it and stake it, or do whatever you want, but just hold it, right? And I think that's the best way to express your view on this protocol.
Okay. So so I can essentially own the token of that protocol and then kind of grow with that. Supposedly, that's what you're
Yes.
telling me. So then I don't need to hold some of the major tokens out there
Yes.
to be part of this.
Yes.
Okay.
Yes. It's like stocks, right? You don't necessarily have to buy the fangs. You can always buy the growth, more speculative ones. I think, in my opinion, again, DeFi represents the speculative part of crypto because it's such a fast growing space, and it's such a new space.
But to get the clarity out there for our audience, the process of staking is taking one of all these major protocols, major tokens,
Yep.
Ethereum, whatever have
Yep.
you, to pass to the DeFi project
Yep.
to use as liquidity,
Yep.
and then they pay me an interest.
Yes.
That's the main idea,
Yes.
right? But if I want to ride on this growth of this protocol, I can also buy their tokens
Exactly.
directly.
And staking, the other thing about staking is that in some protocols, when you stake, you get paid in their token. So you are still
You have interest in their success.
exactly, right. So you're skin in the game as well. So investing, even though you may choose not to own that token outright, you're still having skin in the game because you're receiving that token. So you also want to have a view on the DeFi protocol.
Important. Okay, skin in the game. This is an interesting concept because this underpins the whole crypto space. Okay, fundamentally, this is something that I try to ask everybody that talks about crypto. Okay, maybe not everybody gives me the clearest answer, but I want to hear your perspective because when we're talking about evaluating a company, like you said, right, we're owning a fraction of the company to an equity structure. Okay, then depending on how well the company is doing and all that jazz, we will make our money from there. But when I'm investing in a token, I'm actually just buying a part of the overall infrastructure, buying a part of the product, right? So then how does the skin in the game idea underpins this whole idea of like, okay, you're not just you don't own the main thing, you don't own the company that is running all this technology, but you're owning a part of the technology itself, because it needs all this to work. Right. So how does skin in the game kind of translates into this idea? I don't know, am I making sense?
Yeah, no, you absolutely right. From a layman's perspective, skin in the game is being an equity holder. It's like owning, if you own a share of Amazon today, like I have skin in the game, right? I want Amazon to be successful. I want to be a user of Amazon. I want to be promoting Amazon and passing my referral code to my friends. Similarly with token, I think it's a bit of an abstract of departure to the way we think about having skin in the game, because tokens do not represent equity, as we both agree here, depending on their use cases. In my opinion, there are broadly three types of tokens, right? Number one, you have, tokens like Bitcoin, right? Tokens like Bitcoin Cash. They are viewed more as a commodity or a store of value or money, right? Or payments, right? So traditionally, those are viewed as such. And then you also have blockchain protocols like Ethereum, Dot, where decentralized applications are built on them. Those tokens are used more like a utility, right? You own the token because you want to be able to use their protocol. It's like your SQ KrisFlyer Air Miles that you can't use today. The fact that you want to use your KrisFlyer Miles because you want to be using their services, right? That's the analogy I'll give. And then the last one is security tokens, which is very similar to owning equity because you're attributed to the underlying assets, cash flow and equity interest. So security tokens is no different from owning equity. It's just that the token exhibits certain characteristics that are vastly different from owning a stock, right? Which have, like for example, owning a token will allow fractional ownership. Secondly, everything will be on the blockchain. So for example, today I buy a token of equity interest in a protocol. I can see which address actually sends me that trade or that amount. But if you go to your brokerage today and buy Tesla or Amazon, you don't necessarily know who you're buying from or selling to. The fact that you can trace the history of whoever buy and sell, the entire history of transactions is amazing. And it's 24/7. So you don't necessarily have to wait, at 9:30 p.m. tonight to buy your stocks. You can transact on weekends. And then more importantly, for example, in countries like Indonesia where you're not allowed to buy US foreign equities, this basically opens the entire market to this space because I can be in Nigeria, I can be selling my token to somebody in Indonesia who wants a non-Indonesian asset. And lastly, most importantly, it's going to release a very large segment of assets where I really deem and define this asset as private assets that are not necessarily very liquid and tradable. Think of a Vietnamese, fish farm, right? That wants to raise capital but cannot raise capital because it's a rural area, they have no access to banking, and you have a bunch of Chinese investors who want to invest who are very bullish in Vietnam fish farms. A token can literally help resolve that matter because the Chinese can buy the token and the Vietnamese guys can then use the token to raise funds and give them equity ownership. So that whole segment of private assets, it's hundreds or trillions of dollars because we're talking about agriculture, we're talking about places where it's not accessible, where people are interested to invest. So the way I look at investing in tokens is to break down into these three segments. When I understand what those three segments are, then I can understand what drives the value, right? So for example, in terms of like Bitcoin, right? The way I view Bitcoin being successful is adoption, how much people using it and how much people are storing it as attributes for success, right?
And is that why when we look at Bitcoin, a lot of people are looking at the inverse relationship with the stock market? It is not, there's no real utility there. It's a lot about, sharp ratios, is a lot about how they move, as an alternative asset to the stock market. Because as a portfolio, as someone that's building portfolios, we need to substantiate some sort of reason, right? I cannot be telling the people say, oh, market cap is 10 trillion, so it's a good thing. No, right? I need to know something here. Like, how do I know what is the value of it? And how do I invest in it to be smart?
Yeah, I think portfolio diversification, adding Bitcoin, everybody should have, and I must say this, right? Even if you do not believe in Bitcoin, everybody should have Bitcoin because to Jeff's point, right? That's really portfolio diversification, increases your Sharpe overall because it's just an uncorrelated asset, right? But to the point of how do you beat the general market or create alpha, right? And that's really the question that I think Rajiv is asking is really to identify.
Yeah, everybody want to make money,
Yeah,
yo.
everybody make money. So what do you invest in? So the way I look at beating the market, and this is what I suggest to most retailers, is that look at the top, you know, 50 market cap coins, right? You don't necessarily need to go out to, obscure names that nobody have heard of. Just look at top 50, right? Go read, go search, go look at them, and then bet on those where I've mentioned earlier, strong team, great token economics, great use cases that fits your top-down approach in what the world may look, and hold it, right? Hold it. Do not necessarily, like holding S&P over the last 30 years with outperformed, active trading. So buy, hold, and let it compound over the next 5 to 10 years. That's my advice to all retail who wants to beat the market.
Okay, fair. And so then you put it out there, right? There are the commodities and then the utilities, which I understand we've talked about the utilities quite extensively. Essentially, when we're evaluating utility tokens, we want to see increased adoption, we want to see functionality, cash flow generation, and that would empower the whole network, right? Essentially, that's kind of what we want to see as a growth structure,
Yes.
right? And your base case is you want to see the amount of pledging into this network, so that will help to evaluate whether is this protocol going to be successful or whether this project going to be successful, using it very interchangeably, but they kind of mean the same. Okay, and then there's the third one, which is security token, which runs very similar to equity. Yeah, like which is like what you said, right? And this is the interesting part, which is all your NFTs and all your like weird private ventures that are not securitized into the IPO market. They're
Mm.
not securitized in the stock market. They go through this process of tokenization, which is we're seeing an increase here. Whether is it from properties, traditional businesses, art
Mm.
pieces, and what that we're seeing that happening.
Mm.
And people are also excited about it, they're talking about like all the future possibilities of this thing. But I have one fundamental question: who governs this whole structure? Because if I run an IPO, I list my company, there's the SEC, there's all of them telling me and governing and assuring me that I buy this share, this thing is actually there. But when I'm buying all this private company in the fringe parts of the world, right, or I'm buying these weird art pieces somewhere that's been tokenized, what am I banging on? There's no legislation here. You can tell me technology and all that, right? But what am I banging on that the real world physical asset is actually there for me?
I think that's great, right? I mean, you really hone down to another very strong point. Like in stock market, if you buy Tesla, if you buy NIO, you know, there is certain form of fraudulent, type of activity.
Yeah, rest assured, SEC will double down. Yes.
Exactly. But in crypto, one may argue that there's no governing body, right? Because it's decentralized, you can have people in all parts of the world without a real identity working on a project. And we are seeing time and time after again, headlines after headlines, that there were a lot of scam, cash grab in crypto. But increasingly, I think regulators, as what we have seen, are starting to um, try or attempt to govern. And there are instances in China, for example, where there were a lot of supposedly Ponzi schemes where the Chinese authorities have come after very hard on those Ponzi schemes. So yes, I think there's no strict, governing body per se, but increasingly we are seeing the regulators taking a more proactive approach, whether it's in China, whether it's in the US or in Singapore. I think as long as it involves money, the regulators are going to be very careful, right? In like the one very recent cases, right? In Thailand, regulator now is actually looking into regulating DeFi because there has been an uptick in scams, right, or hacks, that they want to ensure that the retail is being looked after, right? The
Yes.
small guy on the street.
Yes. So exactly about regulation, right? So this is another very edgy question. And recently, there's a lot of regulation discussion coming in. We've talked about Tether in another podcast before, and whatever the position as of now, it's been cleared. Okay, depending on whether will it unravel as we go along, that is up to it. But that aside, we are seeing increase in regulation, and one of the main sell of cryptocurrencies, right, is that it is decentralized, that you cannot track, and your identity are being capped and all. But the U.S. government just kind of took back some money from a ransomware, and you're seeing governments actually having the ability to track if they want to, right? Because there's the whole ledger that you can actually track one by one if you want to, and these guys can. So then, does that not fundamentally challenge the whole idea of like, oh, decentralized is private, you cannot be tracked, blah blah blah?
I mean the I think there's a massive misconception where people say that you can't be tracked because the whole Silk Road was uncovered primarily because the founder was using Bitcoin as a form of payment. So to that point, I think using Bitcoin is actually a very silly way of trying to conceal your transactions because it's a very public and transparent network. But there are other tokens, the privacy tokens like Monero or Zcash, where they're very focused in ensuring privacy, where the level of privacy that or encryption that involved in a single transaction would basically give a lot of privacy to the individual. So I think using crypto is more than just privacy. I think crypto embodies decentralization in the sense that decentralization is not necessarily privacy. Decentralization is basically, and in my opinion again, and not Gemini's opinion, it's really the ability for
Comms,
yeah,
yeah.
it's the ability for different people, different parts of the world to interact, right? And that's really, in my opinion, again, it's really a build up from the internet, right? You look at the internet, right? It's streaming data, right? You look at music, streaming music. You look at YouTube, streaming videos, right? But money as a product, right, isn't streaming. Point being is that it's really an evolution to the way we interact in the monetary part of the economy. And then that brings the idea of decentralization because we're always being held hostage, not the nicest word, but it's true, by the banks, right? When we send money, we get, robbed from transaction fees, FX. And this was the reason why I was so deep into crypto, because I was realizing that my domestic helper was getting ripped off for my FX on transactions with Western Union, right? And so for me, that's mind blowing, right? We live in a world where, with all this streaming, video data, and yet money as a form of product hasn't been innovated for the longest time. And I think that's really one of the biggest narrative and thesis behind the whole crypto revolution.
So you think that more regulation is better? Like, is it gonna make it more legit and it's gonna like increase the market cap? And then, as an investor, at the end, I'm an investor, right? It still links back to the question of, is it gonna grow with more regulation and all that, or are we gonna? Is it very political and all that jazz? So,
Yeah, I think like the internet, it wasn't very regulated until very recently, right? So I think regulation can hurt innovation, but because of the nature of blockchain that is decentralized, that if you're going to restrict innovation in a particular jurisdiction, innovation would then flow to other parts of the world where basically the government's allowed. And that's happening already. You can see that certain countries are more
like
restrictive.
Singapore, like Estonia, like
Exactly. So I think those countries will be net beneficiaries of being more liberal if the crypto does take us right into the direction that I think we will go into in the next 10 years, right? Like one of the good examples that I like to share is cars, right? In the industrial revolution where UK was one of the superpowers and cars was being invented in 1940s, we have not heard of a massive or major car brand from UK, right? That is your everyday car like Toyota, your everyday car like General Motors, or even the Japanese cars. But in countries like US and Germany, they were allowing cars to take place because in back in the day in UK, they were basically saying cars are more dangerous than horse carriages, and more incidents, more death, and you take two-person to operate a car in 1940s. So UK were banning the use of cars as a form of transportation. The US, on the other hand, they didn't ban the use of cars. As a result, the superpowers of car brands from Ford to General Motors were birthed. So that's also a good analogy to give to people that, yeah, sure, you can restrict, you can ban, but countries who are going to be more open will be net beneficiary if that trend plays out in their favor.
okay, fair, fair. I think that's a very fair perspective, and you've talked about it, right? And I think a lot of people also know that when regulators come in, means there's a lot more scamish lah, a lot more weird things happening in the space. So they want to protect the retail guys, they want to protect the individuals. So how do I, as an investor, kind of veer away? I know it's very specific to projects, but how do I know what is a project, right, that I put my money and then it turns out it didn't do well, right? So that is a failed project compared to what is the outright scam. How do I sniff it out?
I had a really interesting call with one of the list co here who runs one of the biggest tech companies, and he's they have this venture last night he was asking me, the firm is actually now trying to allocate money and capital into the crypto space. As you know, the NFT space is hot. Um, tokens are hot and it's trendy. So you ask me, how do you exactly invest in a non-scamish project? Because everybody just don't want to lose their job, right? Or get fired, right, by their bosses. So one of the first things I say to him is, when you invest in a project, you want to be investing and looking at understanding who are the investors behind this project. So we were looking at this particular project, and like there's like 20 investors that they have name drop, and some of the investors that we did a due diligence, like there's no website, we cannot find anything on the investors, and that's a massive red flag. If you can't find anything about the investors that's backing a project, then you should really be questioning, your thesis, right? You want to be betting on projects where you have a recognized or an established brand or investment firm or a person backing a project. So for example, if you have a great iconic hedge fund manager or you have a big VC fund that is recognized, these guys wouldn't be putting money in a scam. You like to think that they have a better DD process than the average guy. So
Which means you, right? The
yeah,
average individual.
yeah, exactly. So you want to be investing alongside with if Sequoia is investing in it, you want to be saying, hey, look, I trust your DD, right? I may not be able to be a LP or investor of Sequoia, but look, I trust your investment process, and I'm going to be betting on the same project. So
Due diligence, by the way, DD. Yes, just means they did their study on the project. Yes.
yeah. So I think that's quite easy for an average investor to really sniff out the rubbish and the scam from the really legitimate ones, because a lot of these top-notch VC funds that I know of engage in very thorough due diligence, because their reputation's on the line, and they're a big firm with an army of analysts, right? So you can trust them to do a better job than us, sniffing out the scams and the 10 baggers.
Okay, and I think at this point we really need to recognize that a lot of these crypto projects, a lot of these crypto protocols or DeFi projects or whatever it is, they are really at a very young stage. They're like private investments, right? Very VC way of looking at things compared to when you look at a Listco, a company that's already gone through all the growth phase and then they're going up into the listing. So you cannot compare like Tesla with these guys, or you cannot compare, your big tech guys with these guys. Because when you look at investing in this space, you really have the VC mindset. And in the VC mindset, it's very different. They don't just pick one or two. They pick like 100 and hope that five make it, 10 make it, and they're very like team driven, and it's very trend driven. Exactly like what Eugene has pointed out, and I think that kind of sums up why you put out all these pointers as we're discussing. So yeah, I think that's pretty good. Overall, for all of you that are exploring this space, I think we've done quite a wide array of discussion, right? From staking to understanding utility, understanding protocols, what do they do, and all that things. But the last question: do you have anything else you want to add for our listeners as a retail investor? How do you make money from this space?
I think number one, really, my advice is, whenever you invest in anything in this space, like Rajiv had mentioned, use a VC, mentality, right? To approach. Be ready to lose all your money, right? In a VC, every 10 projects you invest, I think only two or three really, you
Yes.
know,
Hey, two or three is considered a very high hit rate.
yeah.
Just
So
saying.
so be prepared to lose all your money or even your pen. So invest in accordance to your appetite, right? Which is, if you are going to put in X amount, be ready to lose X amount, right? That's number one. Second, my advice is to look at tokens as a network, right? The way you value is network value, right? What's the total network value? How do you ascribe that value? Understanding that, and then going back to having your top-down approach. Does that relay back to your overarching narrative? The third thing is be, as emotionless when it comes to investing. In fact, the more this is really 101, right? And I always say this, right, that if everybody is FOMO, right, and your taxi driver is telling you that it's time to check Bitcoin out, I think it's a time to sell, right? Because if it's so easy, then we wouldn't be having a market. Point being is, you always want to invest when you're convicted, not because you think everybody's investing and it's going higher, but only invest with that clarity and that confidence and that conviction that it doesn't shake you out, right? If you're going to buy at 60,000 because you think it's going to 70,000 and it goes down to 40,000, it's going to shake you out. So better to invest from a set of beliefs that you hold dearly and that you can hold through the test of time and passage of time. I think that's really important.
Yeah, and for all of you that are exploring, you can always use the core satellite portfolio structure. Okay, your core portfolio need not be in crypto, and you can have a little bit. I think who's that Canadian guy? Is it 1%? But either way, just decide for yourself. Put a little bit if it's something you're exploring. If it's not, it's fine, right? Ultimately, everybody has their own way to make money, and you just kind of live your life as you go along, right? So
Yeah, I want to add on something, right? Why do I think cryptocurrency can present a unique opportunity to most people today, right? And in my opinion, and I know I'm biased again, disclaimer again. When
yeah,
I
I
look,
love the self awareness. Yes,
yeah, I'm
yes.
very, I have to be, right? I'm in sales. When I look at investing in cryptocurrencies today, I look at it as akin to investing in real estate in Singapore 20, 30 years ago when it's really nascent, young, it's fresh.
What do you think of real estate now?
Uh,
We can talk about
we can
it
talk about
another
later.
time.
But really, if you think about it, in life, you want to be investing in good risk and reward ratio type of products, right? And for me, investing in cryptocurrencies will give you that asymmetry risk sort of profile where yes, you can lose your pants, all right, you can lose everything, but the opportunity to make that 10, 20, 30 bagger is a lot higher than putting your money in the stock market. And look, stock market, we're seeing cases where stocks get crushed, right? A lot of spec stocks that you guys have invested in since last year have fallen more than 50, 60%. So if the amount of downside risk you are taking is similar to investing in speculative stocks, why not invest in something that gives you a higher return if your thesis play out? And in my opinion, of course, cryptocurrencies has the embedded call option, which is going to deliver superior returns if you have that long-term view.
Sales pitch, sales pitch. Go and listen through, learn your core, learn your frameworks, understand what's going on. I think Eugene has shared a lot of good stuff, in evaluating the value of certain cryptocurrencies. Of course, they are not all the same, okay? It's not a blanket thing. So yes, thank you. Thanks for coming on. Awesome.
Thank you.
Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the Financial Coconut. Knowledge is that much more powerful and interesting when shared, debated, and discussed. Join our community Telegram group, follow us on our socials, sign up for our weekly newsletter. Everything is in the description below. And if you love us and want to help us grow, definitely share the podcast with your friends and on your socials. Also, sign up for our members backend for more investment-related content, live discussions, curated content, and most importantly, your commitment to us is a step forward for us to continue creating great content focused on you rather than advertisers. For more information, check out thefinancialcoconut.com. With that, have a great day ahead, stay tuned next week, and always remember, personal finance can be chill, clear, and sustainable for all. Okay, we have last three questions that we ask everybody. Number one is, what is the core life principle you hold closely to?
First principles in thinking. Always question, your beliefs. And really, if you think that your belief is, like is X today, right? 2 years down the road, question that. Is that the right belief? Is that the right thesis? I always believe in first principles, and you question myself many times, get my family, friends, debate. So adopting a first principles in the way you operate from day to day gives you a ability to navigate and see through the bullshit, I think. So that's how I like to view my sort of core principle in life.
Okay, that's cool. Number two is, what is a personal finance advice that you feel needs to be further propagated?
My view is risk and reward, right? If you're never ever going to put any risk, you're never ever going to be rewarded, right? And you want to be taking very well calculated risk reward. If I'm going to risk $5, I can make $100 versus risking $5 to make $10. But in both scenarios you lose everything. I'll take the former, right? So for me, it's really understanding risk reward and applying and creating as many core option inverted comma opportunities where you can make that exponential return, and that's going to pay off a lot in the long term.
Yeah, I'm seeing a lot of the derivatives underpin coming out. Yes. Shout out to all the Toto auntie, right? You can divert them to buy crypto. Yes. Number three is, which part of your life are you giving additional focus on now?
It's my son, right? So I've a 20-month-old son. There's nothing more important than family. So to spend more time with him, because the best years, would be when he's not asking me to pay for his games, right? Now he's listening to me. So
I'm sure you've been through the game part, right?
yeah. So I know how I turn out as a boy. So obviously, I'm trying to spend as much time as possible when he's obedient. Before he turns out to be a monster like me.
Nice. Okay. Thank you. Well wishes to the fam.
Thank you.